Hi, I'm Jeff Hirsch. I'm here at the Money Show in Philadelphia with Mike Larson. He's the editor of the Safe Money Report and Weiss Ratings. And we've been talking about global economic weakness, the risks. You've been getting very defensive, but where are you actually putting money?
Sure. If you look at a few different sort of sectors and a few different asset classes that make a lot of sense at this point, I would probably start with gold. I mean, I'm not a traditional gold bug, right? I like the metals.
Jimmy Dines is the original gold bug, right?
Exactly. Sometimes I'm bullish, sometimes I'm bearish. It just depends what's going on in the world. I think right now, with negative interest rate policy proliferating around the globe, with more volatility in the markets, a need for sort of chaos insurance, I call it. There's a lot of things that line up for gold. So you can.
So what do you buy? Just gold coins, the GLD?
For a lot of people, the easiest way to do it is just buy the GLD. I mean, they're getting exposure and through their regular stock brokerage account. They don't have to mess around with gold futures or physical and so on. I think if you have a much larger portfolio, then you also have to look at putting some money in physical. And then within the stock market, I mean, the gold mining stocks have been phenomenal. In the last 12 months, gold miners, the GDX, has beaten the S&P by about 11 to 1.
What about the juniors?
Juniors, I like to look for sort of higher quality names. I mean, I'm defensive by nature, so like a Wheaton Precious Metals, WPM. That's one I've had in the portfolio. It's a streaming company, so they're getting the royalty from from financing mines.
Sure.
That's a good name that I like in that sector.
Utilities, other dividend payers, what other ones are on your radar?
Sure, within the defensive space or non-gold type companies, NextEra Energy has been a big winner. NEE, they own FP&L, Florida Power and Light. They get my money every month to keep my lights on.
Well, that's your utility.
Yeah, that's correct.
That's a great way to invest. Buy your own utility.
And so NextEra Energy has been fantastic. I actually just took half the position off for like 21% profits in 5 months in the newsletter. So that's one. I also like a couple other companies that are more defensive REITs. There's MPW, Medical Properties Trust.
Sure.
That's been a great one, a decent yield. The stock just hit a new high because they're involved in the healthcare subsector of
any straight healthcare stuff or only REIT healthcare?
I'm looking for yield, I'm looking for income, and I think that owning that sort of subsector within the REITs is probably the best place.
How about the telecoms like AT&T and Verizon? Huge yields.
Huge yields, but you wonder, if the technology's leaving behind. AT&T's having issues with all the, DirecTV they paid a boatload for. Within that sector, I think if I wanted something with exposure to telecom and this build out of the 5G network, CCI, Crown Castle, has been a great REIT that's in that subsector. They lease the towers, the small cell business. Yields up around the 3% range, and it's been a great one. We also took half profits on that, but I'm letting the rest ride because I think that's another name that's
you sold it, what, up 20%?
That one was about 17-18%. So again, great. You can get great yields, you can get decent gains, even in an economy that may have some issues going forward.
So gold, yields, dividend and income, and some energy stuff as well. Utilities.
Yeah, utilities, exactly. I think that's a great mix for this phase in the economic cycle.
And where do people find out about all these stocks and what you do?
Sure. They can find out more information on the Safe Money Report that I'm the editor of. You can go to www.weissratings.com, get some information about that publication and what else it is we do at Weiss. So love to have you on board.
Thanks, Mike.
Thank you, Jeff.
Thanks, everybody.